Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I want to speak about EURGBP because we do have quite interesting price action and structure. Now, starting here from the monthly time frame, what we can notice is that we have a market which at the moment is testing a very strong level of monthly demand and support. From here, all this move to the upside was created. Again, the market here tested its zone and rejected it to the upside. At the moment, the market just tested once again this level and started rejecting it to the upside. If we have to identify the top of this range, it will clearly be around this area, which served as a top for this market multiple times in the past. So there is good probability that we will see the market create a continuation to the upside to go and test this high as the top of the range. So from a monthly perspective, there is definitely the possibility for more bullish price action to develop because there is room for more growth here. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we must notice how the market has just printed in inverted head and shoulders. Here we have the left shoulder, here we have the head, here we have the right shoulder. The market rejected it to the upside, creating a very strong move to the upside and showing that at the moment, the bullish momentum that this market has is very, very strong. Last week, we have seen a massive candle to the upside, which clearly is showing that there is strong bullish momentum. When it comes to markets in general, no market tends to go straight up. At some point, every market will need corrections. That is how trends are created, with a series of higher highs and higher lows. In this case, we had only one strong impulse to the upside, so at some point we will need to see a correction before the continuation to the upside can actually be created, because we will need to print a lower low and after that a higher high. Why the market creates these waves instead of just going straight up? Because at some point the market reaches exhaustion and it will need a correction in order for new buyers to come into this market and at that point create more bullish continuation. Dropping down on the daily time frame, what do we notice? Now here in the daily, we can see how we did in fact have many of these corrections. We had one here after this impulse, another one here, and this last move to the upside was very, very explosive, with the market creating this massive move to the upside. And by the way, I spoke about EURGBP a couple of times in the past. I spoke about it after we had this impulse here and this correction to around this area. I made a full breakdown when the market was here, explaining all the reasons for which we expected this rejection to the upside. The market created that. Then we had another correction, and from here I made another breakdown of EURGBP, explaining all the reasons for which we could expect this rejection to the upside, which is in fact exactly what the market did. And by the way, I will link both these previous analysis in description, so you can go and check them out for more free education. But now that we had this massive move to the upside with a very strong impulse, how we could be approaching the next potential move. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, so the institutional side of the market. If we go and see what we have on the euro, we can see how with the last reports, actually specifically with the last report, we had a massive shift in net positions. We went from a negative net positioning with minus 11.8k net positions to now having a positive net positioning of 33.4k net positions, with longs getting increased from the 191k that we had here all the way up to 206k, and shorts getting decreased from 254k to 173k. So the euro is getting quite strong. If we go and see what we have on the pound, we can see how on the pound overall we are continuing to see decreases in net positions going from minus 27k to now minus 54k. So the pound is getting weak and the euro is getting strong, and a weak pound and strong euro is exactly what we need for more bullish price action to be developed. Now, since we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse. If we do that, we can notice how the first level to which we could expect a correction to is the zone which is in between the 0.32 and 50% of the Fibonacci taken on this impulse leg. Generally speaking, when you have a move like this, where you have an impulse and you expect a correction to this area, you would, after that, expect some accumulation around this area before a rejection higher. So if the market will actually print a move to this area, from here there is good probability to see a potential rejection to the upside. What do I mean accumulation? Even something like this, where you basically start to see rejection higher, the accumulation of longs at that point starts, and from there you actually get the rejection to the upside. So if the market actually provides this correction, how we could be approaching the continuation to the upside? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries at that point, we could be looking for this potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you will have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that at the moment I'm running a special promotion in which you have the possibility to join. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from your student dashboard, you can get a full refund of the mentorship program price credited back into your trading account. And if you scroll lower, you will see that from here you have the possibility to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.